ahead and officially kick off here. Let me start by, so we want to welcome everybody to the Young Investors Society India Investment Symposium today. We have a fantastic group with us here, and we're getting our students on as well as we talk. I want to start off by just on this first slide, I just want to make a quick comment. The two students that you see in the middle here are two students from the club that we run here in Malaysia at the International School of Kuala Lumpur. This was from several years ago, and then they won our competition here. Let me run through the schedule for today. We're going to start with an introduction by myself. I'm Mark Van Cott, and then we'll have a presentation for about 20 minutes by Sandipan Roy, who's the head of wealth management products at Credit Suisse. We're going to have some trivia questions for you students mixed in here today. So you have a chance to answer questions about some of the markets issues going on in today's world. And then Simon Maisy will be speaking to us, who's the head of corporate development at TradeWeb, next for 20 minutes. We'll have some more trivia questions, and then we will finish it off with a Q question and answer at the end. A little bit about myself. So I'm Mark Van Cott. I'm based in Kuala Lumpur. I've been here for about 6 years, and I worked at Credit Suisse for about 20 years. And I have been helping run our investor group here for the club in Malaysia since we moved here. My daughter Kate started the club, and I love working with young people and having them learn about investing and trading in some of those topics. And I'm also going to be helping more as we move forward with expanding YS in Southeast Asia. So for you students in India, I would love to hear from you all. Please email, reach out, and I'd love to help you all as you kind of get started there. Our first speaker today will be Sandipan Roy. He is with Credit Suisse in India. He's in charge of the wealth management group there. He's responsible for leading the product development, research, and advisory businesses for the Indian clients in the market. And before this he was with the group called ICICI Securities, which is one of the largest domestic Indian brokerage firms before he joined Credit Suisse. He has a postgraduate degree in management, and he has a bachelor's of engineering. And he's going to talk to us for a little bit today about wealth management products in India and how they work and careers in that sector. And so I'm going to turn it over now to Sandipan to spend some time with us. Sandipan, I'll stop sharing my screen and let you share yours, if that's okay.
Sure. Just one sec. Okay, now I'm going to Zoom. Share screen. Just let me know if this is visible.
Yeah.
Yeah. Okay, cool. So, yeah, thanks first of all, Mark, for giving me this opportunity to talk to students, to the young minds, about the topic that I've chosen. Mutual fund, incidentally, it's not written in the introductory CV of mine. Mutual funds is where I started my financial career in. So I started as first, obviously, after engineering, I was a program analyst at Cognizant, and after that, after my MBA, the company that I joined was ING. ING Asia Pac and ING, subsequently ING Investment Management. So that was a mutual fund where I was an equity analyst. From there, moved to UTI Mutual Fund. UTI Mutual Fund, incidentally, was the third largest mutual fund at that time in India. I moved into product development there and was heading all fixed income and PMS products. Over a course of 3 years, rapidly rose through the ranks, and then chose to move to wealth management industry. Saw that as a sunrise industry, and joined ISEC Private Wealth to co-found the private wealth management division there, and happy to share that. It was a fantastic experience where we worked as a startup from a 20-member team doing in Indian currency about 1 crore of revenue in a year to a 200-member team doing about 350 crores of revenue in 8 years' time. So that was a phenomenal journey, and from there then moved to Credit Suisse. Again, a very challenging assignment here, where we have to set up the entire India product platform, strategize, and see how we can really expand into the Indian ultra HNI segment. So yeah, started my careers in mutual funds, and till now have been very passionate investor in mutual funds. Have a lot of friends in the mutual fund industry in India who have grown to become CEOs, CIOs, and other CXOs. Fantastic industry to be in, which has grown multifold in the last 10 years, and especially after demonetization. If you students and the eminent speakers in India what happened in 2016-17. So after that, I think financial industry got a shot in the arm, and AUM has grown by almost 3x since then. What was required, what couldn't be done through a lot of marketing and sales and distribution pitches, got done through one stroke of luck for the financial industry, which is demonetization. And ever since, the savings of common man, as also of corporates, etc., have moved into more financial products, and the biggest beneficiary there has been mutual funds. And with growth in the industry, what you see today is that something actually which I couldn't even dream of when in 2008 I was in 2007 I was in ING mutual fund. Something you really couldn't dream of is listing of mutual funds in Indian stock markets. So even that has become a reality as we speak. We have HDFC mutual fund, we have Aditya Birla mutual fund, you have UTI mutual fund, my ex company. These are all listed on the BSE and NSE stock exchanges as we speak, and even SBI mutual fund is coming up for listing. So something that we could only dream of over the last 15 years has really grown by almost 10x in terms of AUM, and with roughly 42 players in the market, even newer players coming in the market, both foreign players as well as domestic corporates, as also individual fund managers who are trying to acquire mutual fund license and become a part of this extremely exciting industry. It's very well regulated also, and SEBI takes special care of the interest of small investors, and so this is one of the most regulated and most transparent industries you can think of in India. It is even more transparent in disclosures than banks. So that's where mutual funds are as we speak. Okay, so I hope yeah. So what are mutual funds? When I was your age in school, frankly, I had no idea. What are mutual funds? Even when I was in the doing my engineering graduation degree, even then I had hardly any idea for mutual funds. Obviously, you can imagine that was like 1998, 99, 2000, when the Indian markets anyways were still in nascent stage. Actually, the industry itself grew a lot after 2002, 2003, and that is when I also graduated, moved into, IT company and started investing through SIPs into the Indian market. First time I came to know of mutual funds. So mutual funds, which are popularly called MF, you will find, all newspapers refer to them as MFs, are actually asset management companies. And asset management companies, what they do, they collect money from people, which is retail, as we say, and corporates. So retail, I would also include, ultra HNIs in that bucket. So basically all individuals, and from corporates, which are institutions, family offices, trusts, etc. Either directly, so which is a direct code of investment, okay, or through various distributors or intermediaries, which are agents. Okay, so that's how you have two options in every mutual fund. One is a direct code investment, another is an agent code investment. If you have seen ads which are public, which come very frequently even in our sports programs, etc., called mutual fund sahi hai, even Sachin Tendulkar coming and talking about mutual fund sahi hai. So those campaigns, they promote a lot of mutual funds and they promote direct code investments. Okay, so yeah, I think that mutual fund sahi hai campaign has really helped in getting even young people like you hooked on to mutual fund investments in India. So AMFI, which is the association, they have done a real great job in that. So the money collected from investors, which is called the investor capital, is then invested into largely into stocks, which is the equity mutual funds that you see, then bonds, which are the debt mutual funds that people talk about, and then a combination of the two, which are called the balanced mutual funds that you see, or the hybrid mutual funds, that is it. And then gold and silver, which are the only two commodities that are officially investable by the mutual funds. So gold and silver, stocks and fixed income instruments are the staple diet for all mutual funds in India. Nowadays, what has happened, as the mutual funds have grown in size and they have created new business verticals also, under separate licenses, they are also floating alternate investment strategies to invest into real estate, into private equity, into venture debt, into long short funds, which are like hedge funds, etc. But primarily, when we say MF loosely, while will include all asset management companies, in the purest sense of it, it will only include funds which are in the stocks, bonds, gold and silver, or a combination thereof. All these, within stocks, you can also say that any listed security, which means nowadays we have REITs and InvITs, which have also got listed. So a mutual fund can invest in those units as well, those securities as well. Okay, REITs and InvITs. So these are largely what a mutual fund does. Very simple. They will collect money from all of you, and that money is pooled into one fund. That fund then goes and invests in stocks, bonds, gold and silver, right? And for doing all that, obviously they will charge you a bit of fees, which is fund management fee, which is where the entire business of mutual fund operates on, right? So since we are here talking about the careers in mutual fund, I thought it is imperative that I also give you a typical MF org structure, which also helps me in making you understand what are the various verticals or the lines that are there in a mutual fund, typical mutual fund company in India. A global organization obviously will have many more verticals perhaps, but an Indian fund firm like a Reliance mutual fund, oh yeah, Nippon mutual fund is also listed. Yeah, so there are 4 mutual funds which are already listed, or an SBI or an UTI. They will be kind of structured like this largely. Okay, so there is a CEO, a managing director and a CEO who reports to the board, under whom there will be a chief investment officer, who is the guy largely responsible for the fund side of business. You have a chief business officer, you can say chief marketing officer or whatever name you call it by. Sometimes it's called head of sales also, but chief business officer is where all the sales and marketing and products, they all report onto. Then there's a chief operating officer, who has the very onerous job of actually taking care of all the operational processes, all the fund NAV, etc., that come. If you know that in mutual funds publish their NAVs, or the valuation of each unit every day at the end of the day, and all that obviously rolls up to the chief operating officer. Then the chief risk officer, as you can understand from the name itself, job is risk management, to see that the portfolios are being managed as per the risk mandates that are there, the thresholds that need to be operated on, because at the end of the day, you are having a fiduciary responsibility of managing other people's money, and largely retail money, which is where your responsibilities are that much more, right? A person from, let's say, Andaman Nicobar Islands is putting money through an SIP into your fund. So your responsibility is towards that person, that small saver who is putting money in your mutual fund, and hence the regulations and the monitoring, and sticking to your guidelines, investment guidelines and risk mandates becomes very important, and hence the role of a chief risk officer. Chief human resource officer, because human resource, obviously, the mutual funds are large companies, okay, and when it's a large company, you need to manage, uh, you need to manage people, as also you need to formulate policies as you scale up. Typically they will the large mutual funds in India will have anywhere between 3,000 to 5,000 people, including feet on street, etc. So how do you really manage the entire show is what a human resource officer does. And then the chief finance officer, who is the CFO, who will be managing the entire accounting bit, managing the treasury, etc. So that's largely the broad org structure at the top level. If I drill down, mutual funds, the way we understand, the most exciting bit obviously is the fund team, which is where you are managing money, and exactly what even Mark is encouraging you all to do to start investing today. And that investment is this team's responsibility, which is, let's say, a typical fund team structure will be like this, where you have a chief investment officer, a CIO. Under him, we can have a split between CIO equity, which is head of equities, let's say, and then you will have a head of fixed income. Okay, and then you will have nowadays what has evolved obviously is this fund manager on ETFs and index funds as well. So that has become a line of business in itself. Within the head of equities, you will have a head of research who will report onto the head of equities, and then there'll be a set of fund managers who will report, right? Fund managers will again have all these equity analysts who are sector analysts. Okay, they are called buy side analysts because they're on this side of the table where they're actually buying into the various stocks, securities that are there in the market. So buy side analysts typically would be researching on 2-3 sectors at any point of time, and then moving on to more sectors, and once they really attain a level of experience, they become the fund managers. And then there are dealers, equity dealers, who are the guys who are day in and day out doing all the trading bit of it, they on as per the instructions of the fund managers on the various stocks and securities that are there, price ranges being monitored, how to execute large block deals is what their responsibilities are, how not to affect the market when really selling or buying a security and in a large amount is what these guys are adept in doing. Similarly, on the fixed income side, we have the CIO fixed income, who has then the the debt fund managers. Without going into details, debt fund managers, there can be various kinds of debt strategies. Again, like in equity, you have large cap, mid cap, small cap, then sectors and themes, etc. Similarly, on fixed income, you'll have liquid funds, short-term income funds, long duration funds, etc. Credit funds, all these are managed by debt fund managers, who here the analysts are called credit analysts, who will do the research on various companies to give loan to, right? It's in a way you are giving a loan when you are subscribing to their bonds. So that is what the credit analysts do. And then you have fixed income dealers, who are again unlike in the equity side where all dealings happen on the NSE and BSE in the exchange, largely in the debt side the market is over the counter market. It's a OTC market where dealers will have a network of other dealers and treasuries, etc., where direct one-to-one dealing will happen, or sometimes through brokers. There are very large brokers like AK Capital, etc., who will also be helping you to close your deals. And then you have fund manager on the ETF and index side, and again helped by the dealers there. If we say the sales and marketing team, this is actually the largest team that you'll always find in a mutual fund, where you have the chief business officer, then you have head of retail sales, the one that I spoke about, the retail, the individuals, and that generally is divided into various zones, etc. Everybody has their own strategy. Then you will have under the zonal heads, you will have team leaders and senior relationship managers, etc., etc. You have the head of business development, who generally are the guys who are more B2B, which means the mutual fund guy will talk to, let's say, me on the bank distribution side, etc. So head of business development. Then you have head of institutional sales. If you remember, I spoke about taking money from corporates also. These are the guys who directly talk with the corporates, right? Then you have the marketing head. This has become a very important piece now because there are 40 mutual funds, And largely mutual funds are alike in their strategies. You have large cap funds, you have mid cap funds, as I said, or a liquid fund or a liquid plus fund, whatever. But largely most of the large mutual funds will have similar strategies. How do you distinguish and differentiate between them? Marketing becomes a very important play there. It's almost like an FMCG business, right? So there you will have, ATL, BTL, I mean, this is above the line, below the line, etc. But largely you can say that marketing, and then digital marketing has become extremely important as we speak. And that's where the marketing team helps you. International business is also becoming important, and so you have head of international sales, etc. Digital sales, as I said, digital itself is emerging as a channel with all the direct marketing that can happen there. And then you have the head of products, whose job is to develop products, ideate with various market participants, design products, then structure them, understand what fees should be charged in them, then roll them out in the market. So that's the product manager, typical product manager's job. Similarly, on the COO side, you will have, these are the, kind of, so all the processes, audits, compliances, everything rolls up to the COO. So head of legal and compliance, then head of operations. And this operations is an extremely complex affair in mutual funds. You will have, the fund NAV, so imagine, you have money which is being collected from all across India and maybe abroad, and that money is coming to you at a right time. Then that money within a cut-off time needs to be reported to the fund. Then the fund will invest in some stocks, and then the valuations will come at the end of the day. And every unit needs to be then ascribed to each investor. Very complex job, and done by the head of R&D operations. Then you have the banking, who talks after the entire funding bit with banking operations. Fund administration is the other part. You have the chief technology officer becoming a very important role as we speak, because they are assuming a big scale, all mutual funds. And as the reach increases, complexity increases, technology becomes the backbone of the mutual fund, right? So a chief technology officer becomes extremely important. And what is also very important, given the regulators also want it, and given that you are actually talking a lot to retail investors, is head of investor services. There will be a lot of consumer grievance or complaints, etc. I have invested on Monday, but I am getting my NAV on Thursday only. Or I had put in a redemption, my signature did not match, I'm not getting my money. Or even why is the fund not performing? So all kinds of complaints can come, and those are ably handled by the investor services team. So why a career in MF is lucrative? More than lucrative, I would say attractive. Lucrative, you all understand, it's a very high-paying job. Your salaries across all the all the verticals. It's far more than an average employee in the financial services industry. Largely because it's a very cash-rich business, where your ROEs are, or return on equities are, extremely high. You really, let's think of it this way, that a fund which is 100 crores and you are charging 2% as fund management fee, can scale up to become 1,000 crores, which is a 10x, and you can still run it with the same set of people, with the same set of operational platform. So your costs don't increase, whereas your income goes from 2 crores to 20 crores, becomes 10 times without adding incremental cost. So your ROE is very high in this business. It's a very cash rich business, and hence the payouts to all the employees are also quite high accordingly. Plus it's a very highly skilled job. So as obviously the more skill you require in a job, the more highly you are paid, right? So from that perspective, obviously it's lucrative, but it's also lucrative from other things, from other aspects. It really appeals to the intellect. Okay, if you are and various kinds of what should I say, um, traits that you may exhibit, you will find a role suitable to that characteristic of yours in a mutual fund industry. Let's say you have a very analytics bent of mind. You love financial analysis, love going through balance sheets, trying to understand what a company does, why it is doing, almost like Sherlock Holmes, trying to find out what the company is saying in a management meet, and what it is actually putting in the balance sheet when you are, or in the cash flow statement. Are there any hidden things around there? Are there trends that are emerging, etc.? Then you are extremely suited to being a buy-side equity analyst or a credit analyst, and eventually a fund manager. So financial analysts can take this track. If you are more into the economics side of let's say of thoughts, right? More into understanding the monetary policies, fiscal policies, global macro, microeconomics, etc. Then you can become an economist in a mutual fund. From there, you can become a fixed income mutual fund manager or an asset allocation, macro asset allocator strategist also, right? If you are very heavy on quants, nowadays quants has become a very emerging fund strategy. You can become a quant analyst. You can move into risk management. You can become a factor-based investment fund manager. So you can create your own quantitative models. Incidentally, I used to run one quant model for ING in India back in the days. So quant becomes a very lucrative career option here as well. Financial accounting, if you're a typical accounting kind of a guy who loves doing that kind of a role, then fund accounts, treasury, these become your line of businesses. Processes, if you're extremely process oriented, business process reengineering, technology, etc., becomes your go-to area, then ops or a technology becomes where you go. And technology as we speak is actually becoming very important, also from a quant coding perspective because of the quant strategies that they run, also from AI based digital marketing, etc., data solutions that are coming out there in technology. And sales and marketing is an evergreen area which will always be there, whether it is B2C, which means direct to customers, direct to clients, retail clients, or or a business like through a bank or through a distributor, or large corporates themselves, or going digital. Either ways, sales is an evergreen channel which will always be extremely important. Business development and strategy and product development obviously is a core function, because you need to ideate products, then manage those products, and create the entire strategy around each product. Whether what fees you will charge, what commissions you will pay, which channel do you want to focus on. So all that comes in part of the product development management. So yeah, there's a lot to offer in terms of long-term careers across skill sets and preferences. I'll pick up fund management because that I think is something which is of extreme interest here. So fund management is really glamorous. I mean, there is no doubt about it. I didn't intentionally put a Warren Buffett or a Benjamin Graham's photo here because that I wanted to focus on the Indian fund managers who are stars in their own ways, and that's where you'll find a Harsha Upadhyay, you'll find a Prashant Jain, you'll find a Bala Subramaniam, a Shankar Naren, all these guys, Nilesh Surana, Nilesh Shah, so Anup Bhaskar, Lakshmi Iyer, so Sunil Singhania. So these are the guys who are absolute, they have a rock star status in the industry, in the common man's, ideas. And because they're in that noble profession of making money for you, right? So you put in your hard-earned savings to these guys, you entrust them with your money, and they are in the business of making more money for you, right? Giving you that sense of security. So if I move to the next slide, yeah, and hence the question becomes how to become a fund manager. I would say there are three aspects to it. The softer skills as also your academic skills. So the must-haves to start with: degree in finance. Whether it's a post-graduation degree like MBA, which really helps, I would say, or a chartered accountant. I think that's so the MBA and CA are the most common qualifications you will find in the Indian mutual fund industry. Graduation in economics or in BCom plus a CFA. CFA is a necessity now. It's a must-have, but standalone CFA may not really help you. So you need to club it with an economics or an MBA or a CA, and then have a CFA along with it. Will really help you in an academic degree perspective. Analytical skills become extremely important because you go through reams of data and numbers. That's your main forte. So analytical skills, eye for detail, from a softer skill perspective, is a must-have. And the other softer skill that you need to have is an interest. You need to have an aptitude for investments and markets. If you love looking at the business page of the newspapers, if you love looking at the index, how it is moving day in, day out, the equity stocks that are there, what is Havells doing or Reliance Industries doing, if you are appealed by the fact that a war in Ukraine is actually getting oil prices to shoot up to 130, why is it happening, and then how does it impact Indian fiscal situation, government policies, and even the markets, why are markets crashing because oil is going up? If that's a question that really appeals to you, then you have an aptitude for investments, and that's a must have to start with. If money matters and these kinds of incidents, they trigger a thought in you, I think then you are having the requisite soft skills to be in this market. Okay, and then in terms of work experience, mostly, if you're let's say from one of the IMs or XLRI, etc., then a buy side analyst role is open to you, because they do go to campuses to hire directly from campus for buy side analyst. But otherwise, it is the most common route that we see is you become a sell side analyst, which means you are working with a brokerage house or an investment bank for about 4 to 10 years. Sell side analysts generally are sector specialists. They will research 10 to 15 stocks within one sector. Let's say an oil and gas sell side analyst, or a banking sell side analyst, or a IT sell side analyst, or an FMCG sell side analyst, and you hone your skills there with all kinds of fundamental models, understanding markets, etc. Then a typical 4 to 10 years experience can really get you into the buy side of it, to the mutual fund side of it. Again, you will become a senior analyst in mutual fund, and then you grow up the ranks. On the fixed income side, generally what we see is either you need to be a credit analyst with one of the the credit rating agencies like CRISIL, ICRA, India Ratings, CARE, etc. Then your credit analyst path becomes extremely easy. About 3 to 5 years experience in that, you get it. Or if you want to move into dealing, and through dealing you want to move into let's say a GSEC fund manager or a trading fund manager, duration fund manager, then fixed income dealing in reputed broking houses or banking outfits or treasuries becomes extremely important. Okay, and ICICI Bank treasury perhaps, or even a Credit Suisse treasury, and then or maybe with AK Capital, or a similar, a Vivriti Capital, so those kinds of dealing experiences can get you into the fixed income dealing, and then subsequently fund management. Also an economist in a bank or a research house, investment bank, broking house, etc., 3 to 5 years experience can also then get into mutual funds as an economist. With that kind of work experience, I think you become a buy side analyst, anywhere between 5 to 15 years as a buy side analyst. Then the holy grail of fund management is yours. Okay, depending on your performances, etc., you become a fund manager. But there are other parts, which are equally cool. It's not just about fund management. I wanted to focus there because obviously fund management, this is an investment symposium, but CEOs of MFs, you can become a CEO if that is your ambition, that you can become by choosing any of the CXO paths. Okay. Actually, if you ask me, and if you do a quick survey of the mutual funds in India, sales offers the highest probability of becoming a CEO. So two of the gentlemen on the left and in the center were all sales heads before they became CEOs of two of the largest mutual funds in India, ICICI Prudential and Reliance or Nippon Mutual Fund. And the third gentleman on the right side, Birla CEO was the erstwhile Birla CIO. Okay, so sales offers the highest probability of becoming CEO. Fund management is next, but even CFOs and COOs become CEOs too. Case in point, UTI Mutual Fund, the CEO was the erstwhile CFO, Mr. Rahman. Okay, he was the CFO who then became the CEO there. Cool. So that brings me to the end of my presentation. In case I don't know, Mark, you'll have to guide me. Do we have questions now, or we take this at the end of the session consolidated?
Oh, great question. So first of all, that's a fantastic presentation. I think I'm going to move to India now, and I'm going to become a mutual fund manager. Thank you very much for that. So what I would suggest is this, actually. We've scheduled here questions at the end, but I would say that let's have some questions right now. We'll have some questions at the end as well. But for those students that have just joined or who are here, let's take 2 or 3 questions for Sandipan right now. And then we'll have some more at the end because we have a good group of folks here. I find Q&A is one of the most interesting parts of these conversations. So students, go ahead and unmute. You can ask it out loud, or you can type it in the chat. Sandipan, let me start with one question I saw someone ask in the chat group, and that is, what is the REIT? What is an REIT?
Yes, I fleetingly mentioned an REIT and an InvIT. So real estate investment trusts. Let's say today, there are 2 or 3 ways you can buy into real estate. So one, obviously, you buy a physical, house or a commercial property directly. You have a lot of money, you go and buy it, right? So that is your physical real estate that you buy into. Now imagine there's a fund which is doing the same thing, right? So a fund which is buying into a lot of commercial properties, okay, and the commercial properties will have a lot of tenants who will be paying you a lot of rentals, and now these commercial properties this fund is buying because it collected money in a pool. That pool of money which is getting invested in this in these real estate, in these commercial properties, etc., this pool of money is actually an REIT. Very, very loosely trying to explain, but so that becomes your real estate investment trust, which is collecting money from common people like you and me, and then that pool of money is getting invested into various commercial properties, can be residential properties. Then you are trying to earn a rental out of it, which rental is then being distributed to you in proportion to your amount of investment in that pool of money, right? So that is how real estate investment trusts work. Basically, you are getting a fractional ownership through a financial asset into a physical real estate in a pool, through a pool of funds.
Thanks for that. That's a very good answer. Appreciate that. So I think that answered that very well. Students, if you have, we'll take 2 more questions now. If anybody wants to either put it in the chat group or unmute and ask it, please go ahead and ask Sandipan right now.
Mr. Sandipan, how big do you think ETFs are in India versus mutual funds? And do you expect to see competition or cooperation between these 2 segments?
Yeah, excellent question. It's a worldwide trend, and India can't be far behind, especially with information asymmetry going away. Even the markets becoming increasingly efficient. I think it is becoming increasingly difficult for active fund managers to beat benchmarks. And with reams of literature coming out on that, performance is showing ETFs are gaining prominence. So roughly, as we speak, ETFs and index funds will be anywhere between 15 to 17% of the total AUM of equity funds in India, but rapidly growing. So I think it will become let's say 25 to 30% very soon, and then at some point it will match up. So the CAGR growth rate of ETFs and index funds is far higher than active funds for sure in India. So from that perspective, yes, this is an emerging asset class which has now gained prominence over the last 3-4 years. Can they coexist? The answer is yes, because while passive investments will obviously, they have their own merits, and we all know that there's always an element of outperformance, probability of outperformance, which is always there if you can select your stock ideas carefully, which is what an active fund manager does. So mutual funds job is to give you all the options possible, which is why they will give you active fund management offerings as also passive ones, and then it becomes your call as an investor. Do you think there is a merit in the active fund manager? Does he really have the skills in this market cycle to outperform the benchmark? If you are confident and the track record of that fund manager shows that he has been consistently beating benchmark, then you would want to go ahead with that active fund manager. But if you are believing more in going with the market, with the benchmarks, averaging, I guess then ETFs or index funds become your way of getting into the market. They will coexist.
Thanks for that, Sandipan. Eton, did that answer your question?
Yeah. I also have another question. You said that you managed Quant Model. Can I ask about your experience with that?
Yeah, so it was very interesting. I was too excited, fresh out of college. Numbers came easily to me, and obviously, when you see, a lot of numbers, some bit of derivatives in that, got excited. But I think, at least in a very volatile market, with huge amounts of drawdown like India, and especially in a market cycle which saw 2007 and 2008, which can't be really factored in a quant model. You are always, you have to be ready for surprises, and a little bit of human, what should I say, bias has to come in, because fund management markets at the end of the day are as much science as they are art. Okay, so it's a collective conscience of a lot of investors, with lots of strategies, with various, investment horizons, various risk appetites. So it's just, a melting pot, right, for all kinds of thought processes. So there's no one size fits all, but a quant model is trying to predict the trend. What I learned is it's almost always can you get the long term trends right, but extremely difficult to get the short term, market movements, to predict them correctly on a consistent basis. You have to keep on tweaking the models, and you learn. I think that's where AI becomes extremely important, and that's why the quant models have got a fresh shot in the arm as we speak, with AI rapidly developing.
Fantastic. Thanks for that. That's excellent answers. And Eton, good questions. Appreciate that. Other questions from the group. We'll take one more question before we move on, and we'll have another Q&A session at the end.
So I have a question. What do companies that manage mutual funds normally, what's the percentage that they normally charge investors to invest in the funds? And also, how does the profit work? Like, how much can an investor expect to get back? And also, is the profit a bit like bonds where they're pretty much guaranteed their money back, or is there any like possibility that you lose the money?
Okay, we'll take the second question first. So mutual funds have various strategies. Okay, so one is where it is investing in bonds. Okay, so where you have slight bit more predictability in terms of returns, your return expectations can be more or less predictable. But then a large part of mutual fund investments are in equities, right? The equity strategies are where you will see a lot more coverage. And that's where, your returns are more linked to market movements, company performances, etc. So nothing is really guaranteed there. But as I said, in the previous question also, that while long-term trends can be, you can still kind of extrapolate, though not the best thing to do, but at least you extrapolate the very long-term returns and expect something from the markets. That's your EX, your expected return from the market. In Indian markets, it has been somewhere in the range of 11 to 13% at the index level. If you extrapolate the past returns with whatever data that is available since 1987, and that becomes your benchmark, or for any kind of analysis. But this comes with a standard deviation, which is a dispersion of about 20 to 23%. So, okay, so not everybody's experience will be the same. Depends on when you came in and when you moved out. Accordingly, your return experience can be very different. Okay, also the amount of money that you put in, on day one versus the amount of money you put on the day 10 will also guide your investment experience in it. Okay, which is the concept of XIRR. Okay, so that's where it is. A lot of variabilities. Having said that, if you have a very long investment horizon, and at your age, and for the next 20 years, if you talk to me, I'll give you the same answer. I think equity has to be the larger part of your allocation, irrespective of your risk appetite, because it's your ability to take risk which should rule over your aptitude towards risk in your asset allocation right now. And on the first question, typically in India, at least, I can tell you that the equity funds charge you somewhere in the range of 2.25 to 2.5%. Debt funds charge you somewhere in the range of 1.75%. Let's say roughly half of it goes out in distributor expenses. So the funds themselves pocket about 1.25 to 1.5% of the assets that are under management. Yeah.
Very good. Thanks for that, Sandipan. That helped a lot. I have a lot of questions too. I'm going to hold mine to the end, and I'll ask a couple too at the very end. That was fantastic. Thank you for that. Appreciate it. Let's move on here. And we've got a really cool thing to do next, students. So I need all the students now to get to your chat groups because this is going to be fun. You have a chance to make some money here. All right, let me tell you how this is going to work. We've got some trivia questions for all of you. We have 6 of them. You're going to get 3 now and 3 later on. So get to your chat groups, and you're welcome to just join in the chat to do this. Question number 1, and the prize, by the way, for each question, okay, is that we're going to pick one name. The prize is going to be a 500 rupee coupon to Starbucks. All right. So we'll be sending it to you on email. So as I call out the winner, I need you to
participate?
You can get in there too, absolutely. But you got to go slow though, because this is going to be the first one. Exactly. So we're going to ask. So the first question. And we're going to, so make sure I get your email address too, students, as you answer these. So what is the largest company by market cap on the NSE, the National Stock Exchange of India? Get to your chat groups and take a look. I know Google will tell you the answer, but see if you can do it without Google. Give it a shot. Let's see it in the chat group, what you all think. All right, I see Tata Motors. Well done, good guess. Now, actually, you know what? These things can jump around from day to day. So we did this presentation the other day, and we'll take a look in a second. Anybody else? Other guesses? Reliance Industries from Shinini. Who else do we got? Anybody else? I know these are both big companies. So while we're waiting for other students to come in here, many years ago, I had a chance to go to India. I used to work there quite a bit in Mumbai. And I met with Mr. Rajan Tata, the head of Tata Motors back at the time, and had a very interesting chat with him about the future of India in general, all the different companies that they own, because they own not only Tata Motors, but lots of different Tata companies. We were helping them on the financial industry side at the time. All right, anybody else before we stop there? All right, let's see what the answer is here and who's going to get this. Reliance Industries, very good. All right, can I get, is it Vakashini, is that right? Can I get your email address in the chat group, please? So we can get that to you. Well done. So Reliance Industries is one of the largest companies in India. It is the largest on the stock exchange. It's been around for a long time. It's run by a family. And well done to that. Let's do the next question now. We've got 2 more to go for this first section. All right. Question number 2. This is a favorite in our club here at the school that I teach at. Albert Einstein called this the 8th wonder of the world. I can see people jumping in quick on this over time. Can result in huge gains over time as well. Really important. Okay, I see Itong and Zihong, you guys jumped in. Anybody else agree or disagree with this on the call? I don't know that this is officially a place you can go visit, but it is definitely the 8th wonder of the world. Compound interest. All right, so yeah, students, as you all know, one of the things we really focus on in Young Investor Society is the age at which you start investing. That's extremely important. So as a 15-year-old, you have a huge advantage over a 25-year-old or a 35 or a 45-year-old as you start to put your money to work. And I think as Sandipan mentioned, particularly in businesses like mutual funds and ETFs that can be volatile from year to year, but if you invest long-term over decades, you're going to make a lot of money from compound interest on those products. So very good. Itong, can you please put your, so just PM me, Itong, your email address so I can make sure you get that. All right, the prize, well done. So every question gets a coupon, guys and ladies, keep it up. All right, next one. So compound interest was the answer, we know that. Question number 3, this legendary investor bought his first stock when he was 11 years old, $53,000 by the age of 16, and Harvard Business School did not want him. Who is that? Anybody know? Everybody's going to Google right now. All right, I see one here, a guy named Warren Buffett. Now it's Warren Buffett. Very good, I like it. Well done. Anybody else? All right, let's jump to this one. So yes, in fact, it is Mr. Warren Buffett. And who knows, this is a side question. There's no prize for this one, but it's a side question. Who was his longtime partner, friend, and co-investor for many, many decades with this gentleman? He has a couple, but there we go. All right, Itsung, Charlie Munger. Charlie Munger recently made a big investment in a company in China called Alibaba. We call it bottom fishing. Alibaba's fallen quite a bit, and so he's been following that down as it falls. Unfortunately, last night it fell another 10% as people worry about the ADR market getting delisted in the US. All right, well done, Itong. I have your email as well, so we'll get those to you.
Wait, I
All right,
think
let's
that question Tzu-Hong answered earlier for Charlie Munger.
Oh, so Zihong answered that. Yeah, okay. All right, I'll take care of that. Perfect.
Question, was it not?
Well done. Charlie Munger is the guy. Charlie Munger is the guy. Very good job, guys. I think for students as well that are part of the CYIA program, and you did this, I believe, Itong, you had to read a book by Mr. Buffett, correct?
Yes.
Yeah, and I think you're going to learn about Charlie Munger in that book as well. So perfect. Very good. All right, sorry, let me go back. You're not supposed to see this question. All right. Let me introduce now Mr. Simon Mazie. Simon works for a group called TradeWeb, and TradeWeb basically does what we call electronic execution. So instead of having two folks in a trading pit yell back and forth to each other on stocks like we used to do it in the old days, increasingly the world is becoming technically connected, electronically connected, and so a lot of the trading is done on platforms that speak to each other in milliseconds around the world. And I would bet you in another couple of decades, a lot of these jobs that used to exist when I was working at Credit Suisse, a decade ago, some of the trader dealers, some of the salespeople, a lot of those jobs might be gone, and they're continuing to go away as that expands. Now, Simon and Mr. Macy is going to talk to us about a really interesting part of the market. And I know, Mr. Macy, that a lot of the students at YIS ask about this all the time, because we just had a conversation about this in our club the other day. And that is, what is ESG, right? And so Simon will talk to us about ESG investing, environmental, social, and governance investing, and why it's important. Because when I was doing a lot of this, and it's been a decade since I worked at Credit Suisse, I'll be very honest, ESG was not a word. We didn't talk about it very much. And so the markets and society in general have come to learn this is very important. And as you YIS students know, last year, we introduced in our stock pitch competition a requirement that you address the ESG elements of your stock pitch. So this is a really important part of the stock pitch presentation. I'm excited to hear about this, as you guys are, and I'll turn the time now over to Mr. Simon Mazie.
Great, thank you very much, Mark, and it's a pleasure to be here speaking to you all today. So as Mark said, I wanted to just talk about what ESG means and how we think about it as a company at TradeWeb, and what it means for investing as well. And as well as at TradeWeb, I'm responsible for global corporate development, but I'm also the chair of our ESG steering committee, so kind of really looking at like our response to ESG too. So I think the first thing is like, what is ESG? And as Mark mentioned, it's kind of environmental, social, and governance. And really ESG from an investing point of view means thinking about those factors alongside financial factors when you're investing, thinking about the kind of sustainability of the companies or things you're investing in. And the evolution of ESG really, if you think, as Mark said, like not that long ago, it wasn't something people focused on, but increasingly now people are becoming more interested on the impact on the world, not just the environment, but like the world more broadly, kind of social factors, the communities and everything of the companies you're working for and what you're doing and the impact they have, but also kind of where you're investing. And if you think about, there's kind of two things I think are really good examples of how this changed over time. So back in the 90s, there was a very big oil spill from Exxon Valdez, like a massive environmental impact. And really the kind of share price didn't move. Nothing really happened from that. Obviously, it was a huge cleanup over many, many years, but nothing really happened. And now the kind of advent of social media, people focused on these things, the kind of news and impact spreading much more quickly. If you think more recently, the kind of Volkswagen diesel scandal of like when that happened and they were kind of cheating these kind of emissions tests, when that broke out, huge impact both on Volkswagen, but all car companies. Diesel cars became like suddenly like socially unpopular. The kind of price of those cars changed, and really this kind of led to not just the kind of electric vehicles which were coming anyway, but really the kind of the death of diesel cars. So kind of a massive change in how some of these things can have an impact on kind of companies and the kind of world itself. And so from an investing perspective, there's kind of been a kind of evolution of ESG. So the starting point on ESG was really be looking at like sort of exclusion. So you take an index and say, okay, I have this index of the kind of 100 biggest companies in an index. I want to invest in that, but I want to take out all of the companies that I think have some sort of bad thing. So whether they're oil companies or they're companies involved in pornography or weapons or something. So take those out. And that's kind of the first wave of ESG investing, was this kind of exclude certain industries or companies. And then the next wave is to really think more about that and like use of proceeds. And this kind of the development of green bonds and green bond trading, which is really like, what is my investment being used for? So when I invest in a company, what are they going to do with the proceeds? Or if I buy a government or a corporate bond, what are those proceeds being used for? And again, in India, there's kind of there's a lot of these kind of, whether they're green bonds or blue bonds or social bonds or sustainability linked bonds, there's all of these types of instruments out there where the companies or governments issuing them is saying the proceeds from this investment are going to be used for these specific things, and those kind of will have a kind of a purpose, rather than just what used to be referred to as general corporate purposes, which is basically we just need some money to invest. Here they're saying I'm going to invest in a wind farm, or I'm going to invest in developing electric vehicles, or in turning my factory to use renewable energy rather than coal-fired energy, for instance. And then the next kind of wave of ESG investment is really thinking about what are the companies I'm investing, and what's going to be the impact of sustainability or ESG on them. So think about, and I think especially relevant now, if you look at what's happening with Russia and Ukraine, you invest in a company and they have a whole load of their operations based in Russia, and suddenly they're cut off from those operations. So there's a risk there to them being in or operating in Russia that maybe, you know, people should have thought about before investing. Is kind of, that didn't come for free, and there's now an impact on having invested in that company and then being cut off from either a subsidiary, some of their operations, or some of the ability to kind of produce their products. And then I think that the current phase, and I don't know if this will be the last one or not, but really the most sophisticated view on ESG investing now is really saying, how can I work with a company where the company is going to have the biggest impact, and by thinking about ESG, where they can make the most change. And this may be something like, going back to my example of a car company, where the car company, like you might think investing in a kind of petrol or diesel car company would be kind of a bad thing from an ESG point of view. But if the company's really committed and engaging on changing to electric vehicles, or something that has a less damaging environmental impact, or they're committed to kind of really promoting social causes, those kind of things, then those might be really attractive investments. Because right now, from an ESG point of view, people would say, like, I don't want to be in that industry. I'm doing the kind of exclusion type investing that I mentioned before, so I'm going to stay out of those industries. But actually, they have the biggest ability to change and like get re-rated from an ESG perspective and become attractive. So that actually might be like a more impactful and from a financial returns basis as well, important investment for you. I just wanted to touch a little bit on India. India is actually, interestingly, one of the countries that's been at the forefront of ESG. And back in 2013, SEBI, the Indian regulator, was one of the first countries to introduce in the Companies Act some corporate sustainability reporting requirements. So kind of requiring companies to report on the impact they have on both from an environmental and a social and a governance metrics. And then more recently in this year, so actually India has kind of launched a consultation on a regulatory framework for kind of furthering these standards, thinking about how ratings, ESG ratings should work. So India's kind of really pushing this forward. And one of the issues there is when you kind of think about, okay, how do I understand from an ESG perspective, how is this company, what impact are they having, how are they thinking about these issues and their own sustainability and the impact on the world and society they're having. And one of these now that's sprung up is all of these rating agencies producing ESG ratings. So Tradeweb, we're a public company listed in the US on the NASDAQ stock exchange. We get rated by all of these rating agencies. We don't have any debt outstanding. If we did, we'd get a kind of a debt rating, which would be our ability to pay back the debt we take on. But we also now get an ESG rating where they come and look at us from a, how do we fare from an environmental point of view, from a social point of view, and a governance. But the issue now on these ratings is they're kind of very different between different ratings agencies. They haven't standardized yet, so that you get very different ratings. They look at different things. It's not transparent in terms of the metrics that they actually look up. And so for us, one of the things for us is we're constantly chasing, how do we improve our rating? And it's very hard to understand where they've got information and how they value that information. And then also that some of this information that's put out is not audited. So if you go onto the investor relations part of the Tradeweb website at tradeweb.com, we have a corporate sustainability report where we talk about how we think about these factors, how, you know, what impact we have in society, how much energy usage we have, some of our diversity statistics. We put a whole load of measures out, but at the moment, those measures are not audited. And that's why you have one of the terms on greenwashing, where people are kind of really like saying the right things, but not then doing the right things behind it. And so as I touched on there, I'll just talk about like from a Tradeweb point of view, how we think about ESG. So there's kind of three elements to that. The first is Tradeweb as a company. So what are we doing? As I mentioned, we put out our corporate sustainability report. Well, what type of company do we want to be? What do our investors and clients want to know from us, about us? Like, so a big one for us obviously is diversity, both gender diversity and ethnic diversity. So we publish now statistics on where we are on diversity at different levels within the company. Obviously, we're very committed to improving them, and our investors and clients and employees all want to kind of understand that that's a kind of really important topic for them. So we're starting to put out all of those things. We also focused on kind of our impact on the environment. So some small things like how much plastic waste do we have in the kitchen, to some big things on like how we recycling our electronic equipment and actually really understanding what's happening to that, where is that going. And then the second area we're focused on is kind of what we call kind of shining a light on these issues. So we've started, as I mentioned, there's the advent of green bonds. So companies or governments issuing bonds or taking on debt to fund specific things. Now, the Tradeweb we're an electronic trading platform, largely institutional, but we allow institutional clients to come on and request prices in instruments from dealers and then trade those things. And so some of those is with a lot of fixed income instruments, so bonds being one of them. So now we've started looking at what's the volume of green bonds versus non-green bonds? What's the price difference between a green bond and a non-green bond? And the green bonds in the 2021 grew over 75% from the year before, like way outstripping the trading of non-green bonds, way outstripping the issuance of them as well. And that's really driven this kind of big price difference where green bonds are much more expensive to buy now than the non-green bonds because there's a lot of demand for them. People are saying like, I want to put my money where my mouth is and invest in things that have a positive impact on the environment. And I want to make a difference there. And then the last area we're focused on really is kind of how can we help our clients? Are there any business opportunities here? So some basic things we're doing is looking at this labeling so clients can see what are the things they're trading. When they pick up a certain bond, can we suggest a green bond instead of that, or a sustainable bond? How can we help them with their trading? And another theme that actually come from the US, as I mentioned on diversity, is there are now a lot of big asset managers in the US, and where they're managing public money, they have a requirement to invest a certain amount of that in diverse businesses and with kind of diverse owned businesses. So that's something, again, we can help with. We're developing a program to really highlight those firms, introduce them to our client base, and really help them start to compete with the kind of more established big dealers. And then touching on one of the things Sandeban talked about earlier about careers advice, obviously ESG is a really rapidly developing space. We have 2 people within Tradeweb completely dedicated to ESG across all of these streams I mentioned. But there's now a kind of wide variety of jobs being created in the ESG space. I was talking to a contact of mine at Nomura who said they had 120 people dedicated to ESG there at their bank, which kind of made me very jealous of the kind of 2. I wasn't going to mention that to the 2 people we have trying to do kind of all of this work. But there's kind of, and the people coming into ESG is one of the things that Sandeban said, the main criteria is kind of passion for it, and people who want to get engaged, want to kind of learn about it, understand what it means for us and our clients, and then kind of develop Tradeweb as a company and the solutions for our clients. And then, Mark, the last thing I wanted to end on is kind of like, what can your members do as young investors? What should they be doing and thinking about ESG? And I think the first thing I think there is really just like asking yourself, asking the colleagues you're investing with, or asking the companies themselves about like, what are their values? What are the impact they think they're having on the environment or society, and how are they thinking about these things? And I'll kind of finish with an example from Tradeweb. So as I mentioned, we're an electronic trading business. We're not doing any like heavy manufacturing or anything, but a lot of our energy usage is from our data centers. And we're kind of relatively small new business. So we don't have our own data centers, but we rent data centers because it's a very specialized business creating these data centers. And about 60% of Tradeweb's total energy uses and emissions come from the data centers that we're based in. And we have data centers all around the world, and about 30% of our data center usage is in the UK. And those data centers, the provider there is 100% renewable electricity that's used to power those data centers. So there we have like 0 environmental impact from our data center energy usage. But then in the US, where about 60% of our data centers, the providers there are only 5% renewable energy. And so like when we think about that, we kind of started now challenging those providers, saying, well, that's not acceptable to us. Like, we really care about this. We want to understand what you're doing to improve that. We acquired a business off NASDAQ recently, and we're currently based in their data centers. And when we move that over to ours, we're going to move that to a data center provider that can provide 100% renewable energy. Like, we're going to make a difference there. We're not going to go to the data center providers where we currently are, because we want to say this matters to us. We want to know what you're doing, and we want to lower our energy usage by you providing us with renewable energy in the data centers we're in. And so I think that's kind of an example of where it's kind of possible to do that. And without focusing on this and asking those questions, we wouldn't be able to make a difference. But by doing that, we really can make a difference. And I think that then applies to what you're doing with your investments, where you put your money will make a difference. People, as I mentioned, people investing in green bonds now are prepared to pay more for those than a non-green bond, or get a lower return if they care about where that investment's being used. Thank you. So Mark, I'll stop there.
Awesome. Fantastic. Thanks very much for that, Simon. That was awesome. This is such a huge importance, students, as we think about kind of the next couple of decades in investing. And this trend, as Simon said, has kind of only recently started, but it's such a big part of finance now. And that's one of the reasons that Young Investors Society is helping you all think about that and focus on that. So Simon, one of the things I'll be doing is we have a club here, as I said, I'm in Kuala Lumpur, Malaysia, of about 100 students between middle school and high school. And we'll be watching this presentation together with our students so that they can learn more, particularly about the ESG parts, and pitch on their stock pitch competition coming up. So let me do what we were doing before. Let's jump to some questions, a couple of questions for Simon right now, just a couple. We're going to have 3 more Starbucks questions, we'll call them. And then we'll jump to a Q&A with everybody on the call, because Simon has very kindly invited some of his colleagues. I know that Georgia Clark is on here as well. We have Will Tarr, a couple other colleagues to help answer questions that we might have. And we'll just have a discussion at the very end here. So does anybody at this point have a question they want to ask Simon before we move on?
So like, if a company has inherently like bad ESG, for example, like an oil company, if if they do so like if they try to do a lot to like help a society and their governance is really good, would you consider that as a good ESG company, or because of its like inherent like business model, would you consider it like would you consider the ESG bad?
Yeah, it's a great question, and I think that if you look at the ratings agencies, so they look at the E, the S, and the G, and they apply different weightings. So in your example, that company would obviously score very poorly on the E side, and maybe could score highly on the S side. And I think, as I mentioned, this kind of different ways of thinking about ESG, that if you're just doing the kind of the first cut from an exclusionary perspective, you wouldn't invest in that company, and you would say that the kind of bad impact on the environment, it doesn't matter what they're doing from the social thing. But I think if you kind of looked at the more, I think you then want to understand, okay, well, what are they doing about that? How much are they putting into developing renewable energy? Are they building wind farms? They're doing these things, and what proportion of their business is that, and how really committed are they to doing that? And therefore, maybe you kind of say, actually, they are going to make a change. They're going to do that. And I think also you'd have to think about the impact on the other issue on oil is like the parts of the world where oil exists, again, and not always the kind of the best parts of the world from a social or governance point of view. And like, what are they doing in those regions too? And there's a kind of real interesting debate in Europe at the moment about whether nuclear power should be considered kind of renewable or environmentally friendly or not, which again is like a pretty interesting question. And a lot of these things from an ESG perspective, there isn't a black and white, right and wrong answer. So I think that it's like, that's why it's kind of such an interesting topic.
Thanks for that, Simon. Itong, thanks for that question. Did that answer your question, Itong?
Yep.
Fantastic, thank you. Okay, we'll do one more question right now before we jump to the three Starbucks questions, and we'll have a bigger discussion at the end. Anybody got one more out there? I have one question I'm going to ask right quick. Is the E bigger? Is the S bigger, or is the G bigger to investors these days? Which one of those, just briefly, do they care about the most?
I think to investors right now, it's actually the S, the social side. That's where we get asked most questions. I think if we think about like our employees, that matters. I think the E matters too, and maybe like a generational piece on that. And I think then the longer time horizons you have, the G matters more, because the governance, how companies make decisions, should impact the E and the S over time as well. But I think the right now, the kind of S side from an investment point of view is the one that matters the most.
Okay, that's really interesting to me. That's fantastic. Thank you for that. I've got more, and I'm sure students have more ESG questions at the end too. We're going to hold those right now. I'm going to go back and share my screen for a second. Simon, thank you so much for that introduction. I know that you have some folks from TradeWeb on. We're going to include them here in just a moment. Let me share my screen back, everybody, and let's do a couple more questions. All right, there we go. All right, get ready, students, for the next three questions. 500 rupee. We're told that 500 rupee is about, what is that, Sandipan, in dollars? Is that about $7? Is that right?
Yeah.
All right. How many Starbucks does that buy you?
That gets you 2 Starbucks coffees, cappuccinos.
All right, not bad. All right, very good. Here we go. Let's get going here. Trivia question. And I know there's quite a few India students out there. I've been texting with some of you guys in the chat. So answer this, jump in here. Benjamin Graham, the father of value investing and the author of The Intelligent Investor, was a longtime professor at what esteemed university? I will give you a hint. This university was in America. I know that's not that big of a hint, but then oh, there we go. Okay, I was going to say the second was going to be New York City. Very good, Vakashini. Well done, Vikashini. I hope I'm saying that right. Sandipan, am I saying that right? Okay, I got a thumbs up. Very good. Very good. Okay, so we will get that to you. So Columbia University, fantastic. Very good. Next question. Everybody get ready. Itong and others, you're welcome to be part of this. Columbia University. All right, now this one's a cool one. I'm going to talk about this for a second. Who was the first shark of ABC Shark Tank to host an interview with YIS students? Mark Cuban. Now, I wonder why Yitung knows that, and I'll just share a quick story really fast at this point. There is Mr. Mark Cuban. There is my daughter, Kate Van Cott, actually. So Kate Van Cott, who started our club here in Kuala Lumpur, she won the very first year Shark Tank competition. And so she and myself, because she had to go with the parent, flew over to Dallas, Texas, to go to the American Airlines Center where the Mavericks play, the Dallas Mavericks. And we met with Mr. Cuban. Very cool gentleman, I have to say, very laid back for a man who's worth $6 billion. And we met him in his offices there at the American Center. He met with Kate for about 45 minutes. If you want to ever watch his interview, it's on the internet. You can go ahead and Google Kate with a C Van Cott, and you'll see that conversation she had with Mark. But Mark had a really fascinating, yes.
What's he holding there, Mark?
So that's a great question. So she pitched, so the competition, students, involves taking two of the things that were pitched to Mark and explaining why a student would invest $1 million in these. And so what that is, it's called a pet defender, I think it was. It's basically a suit that an animal wears to stay cold or to keep its fur from shedding. So this was for cats. So a cat wears a little cat uniform. You'd be surprised how many they sell on the internet of these things. And so I actually bought one. I ordered one off the internet and took it with me to have Mark sign it. But the cool thing I did too is I took 3 basketballs and had Mark sign those. So I'm hoping that someday when Mark Cuban is president of the United States, that we'll be rich. So I say that because we joke. One of the things that was in the press for a long time with Mark was he going to run against others for president of the United States sometime? So good man, really good man, very laid back, very just down to earth. And so students, at this point, for just 1 second, I'll give you a pitch. Participate in the Shark Tank competition. It's still open. The 14th of March is the last day to participate, and you get to interview or meet with or talk to and be involved with some of the Shark Tank folks. All right, so who actually, let me go back. Who got that question? Yitung got that. Okay, Yitung, well done. Well done. Next question. What is the largest company by market cap listed on the US stock market? And when I was asked this question, I got it wrong. Now, I will say this too. I've mentioned this earlier. The Chinese stock market listed companies in the US got hit pretty hard last night. So this may have changed a little bit. But let's stick with what we got. Who's got some guesses out there? Let's see these guys. PetroChina, good guess. I'll tell you it's not PetroChina, so keep guessing. A couple more. Alibaba. So that was my guess. I thought Alibaba, and that was not it as of a week ago. It's Tencent. Very good. Well done. It's Tencent. Tencent is the largest market cap company listed on the US exchange. Just by way of discussion, because this is a current topic we're talking a lot about in our Young Investors Society Club, is obviously what's going on geopolitically between China and the US, and how is that affecting listed stocks that are Chinese companies in America. And so that's a really fascinating topic for a lot of students in Asia, because so many of these companies have listed on the US markets, NASDAQ or the NYSE, but there's discussion about them being delisted and having to go back and remain only in their home countries. So let me ask right quick now, Sandipan, are there a lot of GDRs or ADRs in the US of Indian companies these days? Is that a common trend?
Not a very common trend. I think some of the Indian companies go ahead and list directly in the NYSE or the NASDAQ. But yeah, there are a few.
Okay.
Not too many, but it's not a prominent strategy.
Would Tata have a listing in the NYSE or NASDAQ? Tata Motors, for example, or Reliance for these companies?
So Tata wouldn't have. No, Reliance also doesn't have. Most of the IT companies would have, like an Infosys or a, yeah. So no.
Got it. Okay, so it's the tech. So same with China. It's always the big tech companies have gone there for listings. Exactly right. That's really interesting. Okay, so let's move to, so well done, students. That was fantastic. So we're going to go to Q&A now, and I'm going to also get Will involved in this. Will is from TradeWeb as well. And Will, if I could just ask right quick, where are you based?
I'm based in London, or near London.
Oh, fantastic. And how long have you been with TradeWeb?
I've been at TradeWeb now for just coming up to 6 years.
All right. So we're going to pull you into this Q&A session if you don't mind at all. And Vinod, are you with TradeWeb as well?
I am indeed.
All right. We're going to pull you into this as well, too, with some questions. I have questions for all of you as well. Where are you based, Vinod?
I'm based in London.
Everybody's in London these days. Okay, very good. But one thing that's cool about Zoom is we can get together from all over the world and discuss these things. So let's flip over for a second now to final questions and more of a discussion. I know from India, we have a number of students on because I've been chatting with them offline. So I want to make sure that you all get involved in the conversation as well. Does anybody want to kick off with a question? I know sometimes people are a little shy. I'm happy to start with one. And you can always go to the chat group as well to ask a question if you'd like. So there's nothing wrong with posting a question there. So let me stop for a second and open the floor to all of you students that may have some questions here. And if we have much silence, I'm not going to call names. I'm going to ask the first question. I'm going to ask Will a question. This is my question to Will. So Will, you're a trader, correct?
That's right. In a previous life, I was a trader, yes, before I joined TradeWeb. Yeah.
Just tell us, what's your career path? How did you get into what you do? How did you came out of uni and started right away? You did something else first? What happened?
So I actually started off, my university course was one that had a 1-year industry placement as part of its graduate program. So in my third year of university, effectively, what would have been, I had to take a 1-year job working in industry. And in that 1-year job, I ended up working in 2008 and 2009, working for a very large American investment bank, working in what was their credit prime brokerage team at a very interesting time in the year. I think that really up until that point, I hadn't really fully crystallized exactly what I wanted to do for a long-term career after university. And, you know, certainly going to work in that environment in that particular time certainly fueled my appetite to sort of want to work in financial services and, more importantly, work at the sell side. So I was fortunate enough afterwards, once I graduated university, to go back and work for the same bank in a similar role. And shortly after I'd started in that role, the opportunity came up to move more towards on the trading desk and take on a number of different roles. And one of those roles was in electronic trading and helping develop an electronic trading business. And then towards, once I'd done that for a couple of years, I actually moved into short-term rates trading. I'd always had an appetite for, I described traders as actually just being extremely good risk managers. And you just have to be a better risk manager on more occasions and have it with the right weighting of capital allocation than you do the times that you lost. And that was just good business practice. And, you know, I kind of carried that forward into when I was given the opportunity to move onto a trading desk. And I traded what was the short-term money markets business for a few years, which meant I could kind of really cut my teeth on that.
That's fascinating. I'm always fascinated by people's different stories of how they got into finance, because we all have a different path, right? As I said, I worked in Hong Kong for many years. And so we had a lot of folks from the UK in Hong Kong who worked on the trading desk. I was both investment banking and trading. And it's really neat to see the different paths there. So a question for you as a trader in electronic trading, how have you, and you've been doing this for a while, it's changed a lot the last decade. What do you expect to see in the next decade? Is it do you see a day that they don't have, individual people on trading desks as much or at all, or what's going to happen here?
So I think, as you rightly say, that the last 10 years has evolved significantly, and the role of, both as a trader, so on the sales side and on the bank liquidity side and on the investors side, who are the sort of buy side, as we call them, both the use of technology and the role of the keyboard has significantly evolved. 10 years ago, a significant majority of execution that was taking place was still being done over the phone. Trading floors were very heavily staffed. As much as the technology was there as more of as a sort of support element to the business. Now, for a lot of banks and a lot of clients of ours as well at TradeWeb, it is the forefront of their business. So What's changed, I think, is the information processing and the availability of data. And that is a significant component which aids decision making. I think Sandipan made a very point earlier on around, data has become more and more accessible. There is a lack of asymmetry in the amount of data that's available in the marketplace. So now it's a case of how quickly can I interpret that data and make a decision off the back of that. And as good as a human brain is and as objective as a human brain can be, if you're building a computational model will come to the answer quicker. And if you're in a position to execute that trade immediately off the back of that, you're in a position where the role of a human element to trading and decision making, I think, really becomes around like risk tolerance and risk management, and understanding a little bit like a pilot is that you've got the system on autopilot, you've got the bits that you need to control, but ultimately at some point you're going to need to handle the controls and understand all the things that are going on. And I think that's the bit that's changing and particularly as we're seeing now in the world, the situation that we're in, is that there is a huge role for decision-making and human element, which when markets become very stressed and dislocated, you need to be able to take back control and sort of hold onto the reins. So of course, efficiencies are gained and you adapt with technology and move, but there's obviously a significant element of human input that requires it. I think it just has to be more specific in terms of what you're looking for and how you're monitoring risk.
That's a fantastic explanation. I love the analogy to an airplane pilot, where for much of the time you can let the autopilot system take over and do it for you, but you've got to be able to jump back in and take control of the plane at certain times. And we're seeing a lot of that volatility in the markets right now. I think that's, you have these periods where it's quite slow and boring to an extent, and then it gets really busy and crazy. So that's very good. I like that. Thanks very much for that. If Vinod, I know Vinod, you have some investor calls that are going on. If you're there, jump on. Just wanted to hear, is now a good time? Are you free for a second?
Yeah, no, it's good.
Awesome. I know we texted. So just wanted to understand your background really quick. If you could tell the students, both here and the ones that'll be watching later on, kind of what your background is, how you got into finance. Would love to hear that.
Yeah, absolutely. Hi, everyone. Thanks for joining. I'm actually a TradeWeb lifer. So I graduated in international business from London University back in 2004 and was given the opportunity to join TradeWeb that September. So the company had actually only been around in Europe for 4 years at that point, and in the US a couple of years longer. And I've been there ever since. So I'm coming up to my 18th year at TradeWeb, and I'm currently looking after the product management side on equities, looking at the distribution and how we push our offering to our clients in Europe and Asia.
How many people does TradeWeb have now, and how many did they have back when you joined? I'm curious.
So now I think we're nearing, and Simon will correct me, I think we're nearing the 1,000 mark. When I joined, I think, well, in the London office, definitely we were in the early 20s. So I was 22nd or 23rd employee in the London office.
Oh, fantastic. Okay, that's great. It sounds like my career. When I joined Hong Kong in 1995, the Credit Suisse office, we were 30 folks. And now I think we're, as Sandipan probably knows, probably several thousand folks. So the industry in Asia has really exploded and grown a lot. It's been fantastic to see. Thanks for that. That's a really interesting career. Vinod, can I ask, who are your major clients, not in terms of names, but in terms of type of business? Are they the big investment banks? Are they hedge funds? Do you do any pension funds? Who are they?
I think all of those that you named. When we think about our client base, what we call the dealer to client business is very much focused on the institutional client base. So for the benefit of the group, we're not talking about retail investors, that's a separate arm of the business, but very much the institutions. So as you mentioned, the asset managers, the hedge funds, insurances, banks, private banks, all make up the ecosystem in terms of the clients trading on the platform. And I think for us, it makes it very interesting because I've been involved in really selling the complete offering. So if we think about the pillars that we are active in, you will have rates, credits, and equities. And in terms of pushing the product, you realize that you have differences in the client makeups. So if we think about the asset management community, when I started out, you had a big proportion of the portfolio management community that was actually trading themselves. And this then moved to a centralized execution desk. And then you will have hedge funds, etc., who will, where the decision makers will be doing the execution themselves. So that's one point. And we also, especially operating in Europe, we realized that the cultural differences between the countries. So I think we've been really good at adapting, having local coverage and understanding the marketplaces and understanding how we can really push our offering to those clients.
Fantastic. Thanks for that. That's really interesting. No, I'm learning a lot too, students, as we go through this. I'm going to ask students as I ask a couple more questions, and I know we're kind of getting near the end. It's 8:09, so I'm not going to be much longer here, another 5 minutes or so, if everybody can hang in there. Just raise your hand or put your question in the chat if you'd like to. Let me just stop for a second. Anybody out there, any student want to come online and ask a question to these gentlemen and ladies in person?
May I know what typical career path into the fintech field? So for example, if I were to join a company like TradeWeb, what would I have to do from a university until I graduate to join a fintech company?
I'm happy to take that one. And Simon and Vinny as well, feel free to chip in. I think, one of the benefits or elements of our business is that we're very sort of broad in terms of the type of individuals that we look for. Obviously, when, a lot of employees have had, on our business side, have had experience working at either the sell side or on the buy side for a few years. I think that helps kind of shape your sort of foundational understanding of financial markets. But that's not to say that we're by any stretch restricted or limited based on people's experience in those areas or not. We actually have a number of employees sort of coming through at a very sort of younger age who haven't worked at sell side, and now we're a much bigger company than certainly when I started and before then as well, that we've sort of got a much more robust sort of graduate process where we're looking for people who have obviously got an interest in finance. It helps if you have some understanding of finance, and but it's certainly not a prerequisite, because we have a lot of different roles within our company, as though we're a technology firm, but we're also a people business. So we have people that work in support arms, we have people that work in technology, operations, business, corporate, legal, accounting, and sales as well, which requires a lot of customer facing skills. So we're really not restricted. And I wouldn't think that if you don't have a degree in finance or work experience in finance, that precludes you working in financial technology. I think, a number of firms have adapted in terms of the types of people that they recruit. And, I'm certainly a firm believer of having as broad a kind of, backgrounds that you can get in terms of people's educational background. And obviously cultural and ethical backgrounds adds to a huge amount of diversity within the organization. And it helps with having different perspectives and different viewpoints if you've got those elements of diversity in there as well.
Very good. That's very helpful. Yeah, and one of the questions a lot of our students have is, okay, this is a really cool job. How do I do it? And I know that that's a very common question I get, and we spend a lot of time trying to help students there. Students, another question. Yes.
Mark, sorry, one thing I would add there, I totally agree with what Will said, but the other thing is obviously to look for internships. And I think Sandipan mentioned this as well now. So when I was at JP Morgan, kind of all of the graduates are hired via internships. The same now at Trader, we offer internships for people in Asia, in London and New York as well, for people to spend some time with us, paid over the summer and really that's kind of showing that interest. The kind of long interview process is they're kind of really key now.
Yeah, that's a fantastic.
I agree. That's exactly how I started my career, was doing an internship, and I think it's absolutely foundational if you can.
Yeah. Very good point, Simon. Thanks for that. And well, yeah, my daughter right now, Kate, she's not a lot older than you students. She's 21. She's in college in the United States. She just finished an internship and she's only a sophomore, with a group called Elevation Partners, a venture capital firm. And right now she's with a group called Logan Growth Partners. And these are just during school. She's working at these venture capital funds and such while she's in classes. So think about internships, and we'll talk more about those in Young Investor Society. Thanks for that. Let me ask if we have any more questions from students.
I've got a quick question about ESGs. So I wasn't sure if this was answered, but my question is, are ESGs more of a moral thing, or do they also have an impact on like how profitable the company is?
Yes, that's a great question. And I think there's been, I think it starts off as a moral thing. And there's a lot of studies around how kind of companies that are more sustainable, like have better returns, or kind of female-led companies and what happens to them. I think a lot of that is like, it's a little bit hard to say. I think right now you could definitely say there's money is flowing into the kind of ESG space. So people care about that. And so like from a returns perspective, ESG companies are going to outperform. But I think that there is this acceptance that sustainability in a kind of broad sense, and I prefer sustainability than ESG because I think it captures kind of a broader stuff. It does make a difference to the kind of long-term returns from a company and the life of the company, and avoiding like big downside issues and all of those things.
Thanks for that, Simon. Was that Zihong Jiang that answer your question?
Yep, thank you.
Yeah, there's a lot of discussion about this in the markets, is how much is ESG just a fad right now, and how much is it a long-term business decision for companies to make, and really how it'll evolve. My own personal guess is that over time it's going to evolve and break down into different segments. That, you know, the word ESG will probably change over time, as it always things evolve, and we'll see that happen. But companies, one thing very interesting, and I think all the professionals on the call, the folks that are presenting know this, is all of the websites, as we go through things like Coke or Nvidia or Tesla, they all now have ESG sections with very detailed presentations, discussions about their credentials. It's a very important part of these companies to show the market that they're doing that. So that's a great question. You know, one of the most fascinating parts of these conferences that we have, and I'm going to ask a final question, unless somebody wants to come in the chat group or raise their hand. This will be our last question for the event today. But one of the things I found is students love listening to you all present, and I really appreciate Simon and Sandeep, your presentations. They're fascinating, and I guarantee you a lot of students will be watching these online as well. But the Q&A section is always one of the most interesting parts. I mean, you could go on for hours sometimes, I found, with students. So my last question for you, and this is one that I think a lot of students will be interested in, particularly in India and in Malaysia and in other countries, is as you look at the future of finance in the next, say, decade, because a lot of these students right now are 15, 14, in that age range. So a decade from now, when they're out on the markets working, how will the nature of working change in terms of locations? And what I mean by this is, when I was in the business, and I've been out for about a decade from a big investment bank, you had to work in Hong Kong, New York, London, maybe Tokyo, Singapore was a place you could go. You know, maybe Chicago had a small office, but you really needed to be in one of those financial centers physically to participate in the real core business of investment banking or trading or such. Now, the COVID has sped everything up, and now we all use Zoom. How do you see our students kind of 10 years from now working? Do they need to go work in New York or Hong Kong or London, or can they do it from somewhere else and have the same kind of experience and opportunity? Now, let me ask Sandeep first, if he doesn't mind first on that question. And then we'll go to Simon, and then I'd love to hear Will and Vinod sound off on that question.
Yeah. No, so Mark, since we are recording, I just wanted to come on record. I put it on the chat also that Tata Motors, I stand corrected there. It has an ADR, so it's listed on NIC. So with the disclaimer, I think you stumped me there, for some time, and I got confused and I had to Google it up. So coming to this, a very interesting question. See, the way I see it, and India anyways has proven, even long before the COVID, that a lot of work can be done from remote locations, right? Through the KPO industry that grew, right? A lot of the back office and the mid office transactions or roles, they moved out of the main hubs and moved to locations like India or Philippines, who could work with the teams abroad in a seamless way on these things. Now, coming to the front office, can the same be done? I think at the end of the day, human beings are social beings, right? And investment banking especially is more of a relationship. And the more senior you become, the more relationship oriented is the job, and less of spreadsheets and technicals. That's more of an analyst or an associate job, but at an MD level or a director level, it becomes more relationships, right? And human relations can't, I mean, while you can have your Zooms, etc., to complement the same, you cannot replace the personal touch when you are face to face, right? So in future, I think the hybrid model will operate, which means that you can one, for some jobs, you can afford to be in a different location and work on the same times. But for more let's say sales oriented or more relationship oriented jobs, I think the rule remains the same, and it will continue to remain the same. You have to be at the location.
Thanks for that. That's a good answer. Simon, what do you think?
Yeah, I think I share Sanpan's views on the kind of flexible working. I think that, and maybe like it's because I'm old, but I think that like the being in the office makes a difference, and like the and like to kind of be able to interact with colleagues frequently is like does make a difference to our ability to innovate and do new things. And there's actually, I listen to a lot of podcasts now, and there's one from David Solomon, who's the CEO of Goldman, and he was talking about career advice, and he was saying like being present makes a difference. And I think you could interpret that as physically present in an office, or actually like sort of mentally present when you're on a Zoom call, not doing something else, like really paying attention as if you were physically there with the person. But having said that, I do think that if you're a fintech company, you could be a fintech company anywhere in the world and compete and offer your services to anywhere else in the world. I don't think you necessarily have to be in London anymore to kind of roll out a business or a service. You could be in India, or you could be in Germany and roll that out in London. So I think that has changed, that the world has shrunk from that point of view. But I think actually from our side, both Vinod and Georgia interact with clients on a daily basis. They might be able to talk about that kind of virtual versus physical interaction with clients would be interesting.
Yeah, and I like that. Thank you very much for that. And I want to get Georgia and Will and Vinod involved, because as you mentioned, I think you and I are old people. I put myself in the old people category. But let me flip over to Will, Georgia, and Vinod right now. Do you want to comment on that now? I think you all look a little younger to me.
Definitely a compliment. So look, I think, yeah, there's definitely an element of, I think, probably a generational, I think, difference. And certainly, coming through, we're seeing, younger graduates coming through, that there is a different expectation in terms of remote working and work-life balance. And I think having a hybrid model, which, I'm certainly a big advocate of, is, there are huge benefits of being in the office. If you've got a role, or you're in a team where the transmission of information and the sort of osmosis of ideas comes together, you really struggle to create that in a digital environment in the same way. But equally, I think if you're there's some elements of jobs which require you just need to be able to focus on your task, and actually being in the office can sometimes be quite distracting because you've got a lot of other things going on around you. So that's personally for me, I actually find doing, and can't sit in my ivory tower and say I'd rather be in the office although I have COVID, so I'll say that I am legitimately isolating. So, but there is an element of being able to sort of have a balance between the two. And I think, we need to recognize that as well. And I think a number of companies, whether you're in fintech or not, and even in banking, whether you're traditionally, a voice salesperson or trader, there's definitely more adapting to being able to be remote, but you can't replicate the immediacy of sort of, thinking of ideas. And I think Simon touched on it as well, is the sort of the new business innovation stuff, which particularly for a business like ours, where we're constantly looking at ways in which we can sort of come up with new ideas, or, figure out where there are inefficiencies in workflows, which you can kind of discuss that with your colleagues and real life examples in real time. That proximity helps you with that discussion. But if I've got a 20-page presentation I need to put together, sometimes it's better just to be in these four walls and a bit of quiet time.
Yeah, interesting. That's exactly true. Yeah, I'm learning a lot too about Zoom, and as I work from home as well. It's interesting to hear your perspectives on that, Will, because we are different from different generation. I'll have to say, investment banking generation for sure. That's very fascinating. Georgia, can I ask you for a second? You look like you're in the office. Yes.
Yeah, I'm in our Paris office. So we've opened very recently in February. Opened an office in Paris because of the movements, let's say, of the banks to Paris. So there's a bit more of like a financial hub here, and we see it as very important to have a base. But I just wanted to, I was just thinking, listening to everyone sort of say what they thought about, you know, in a few years' time or 10 years' time, what the model will look like and why it's important, you know, the pros and cons to working from home or working in the office. I would say for someone who's starting their career out, definitely for me, there's an importance in internal relationships and there's an importance in human interaction and sort of the conversations that you can't have over Zoom or, you know, for example, just, I know it's not, you know, the work way, but going out for a drink after work or making a really good friend at work, you know, you can strengthen relationships through that. And we see it, you know, at TradeWeb, you have teams. So for example, I sit within the European Client Services team on the buy side. And we are a team that like to come into the office very often. We all have a very strong relationship. And it's very important. We work with, you know, we sort of siphon queries and talk to loads of different teams internally. And it's important to know these teams and to know these people on a name-to-name basis. And, you know, how are they? It's very simple things like that. But I think, you know, for people starting off their career, it's really important.
Thanks for that. Yeah, that's great to hear. I mean, it's good to hear that human touch is still necessary. I'll share an experience after we hear from Vinod about my own daughter, just very briefly to wrap things up, because I'm going to guess you're the youngest on this call of the professionals here. I don't know that, but from what you just said, I guess, how long have you been working at TradeWeb now or in the industry, Georgia?
2 years and nearly a bit over 2 months. Yeah, 2 years.
Out of uni, or did you work before that?
Yeah, pretty much out of uni. Yeah.
Okay, very good, fantastic. All right. So Vinod, if we can jump to you now, right quick, what's your thought on that? Because you're in product support, is that correct, or product developments?
It's product management. I just start by saying, Mark, when you said you're the youngest on this call, you were looking at me and I felt flattered, but
sorry, no, exactly.
No worries, no worries. It worked well for my ego. But just on this point, I was in Madrid for the last couple of days meeting some of our important clients. And for me, you know, to confirm Simon, Sandeepan's, Will, and George's points, that there's nothing like the human interaction. I think, for example, what was discussed in those meetings is definitely more valuable than what can be done over Zoom. And I think also for a company like ours, which is looking to innovate and really push the envelope forward, whenever you want something new to happen, I think it's a lot more difficult to do this remotely. So to maybe Sandeepan's point earlier, when you're thinking about front office, this is probably where we think, you know, that the human interaction is definitely the most important, because as mentioned, you know, when you're looking at a Zoom, when you're having a Zoom with a client, we've definitely experienced this over the past couple of years. You don't always have that 100% attention. There's always going to be one eye on something else. And when you want to have those important conversations, you know, at those key points, it's always better to do it in person.
Very good. I appreciate that. That's very helpful. So I appreciate all of your comments on that. That's fantastic. Last question we had is that one, but I'm going to finish with some comments first on this particular question we've talked about. I want to share a quick experience with my daughter. So as I said, my daughter's in college right now. She's studying accounting and finance. She's done several internships. Right now, she's taken 3 months off from school. So she's still in the program, but she's doing a full-time internship that is associated with the school. It's with an investment banking firm, a sell-side firm that helps other companies, particularly small cap companies, sell themselves. So she's working from her dorm room 12 hours a day, 5 days a week is this internship. And I've asked her, I said, look, her name's Kate. Kate, how does this work? Where are your other bosses at? And she said, well, one's in Hawaii, one's in Dallas, there's one in LA, there's about 100 people with the firm. And I said, well, how do they go and see clients? Because you're doing sell side, you're helping companies, small companies sell themselves. And she said, they don't. Nobody meets anybody these days in the particular company that she works with. And she said that companies have found that they'd rather save the costs from travel expenses And for meetings and the time involved, you go for 2 days downtime to go for a 1-hour meeting somewhere sometimes. And so in that particular space, Zoom has really changed the way you do things. And so everything is remote. Many times she said they will go through an entire sell process and sell a company, and the investment banking folks will have never physically met some of the clients. And I just found that very interesting. That's a big change from my day. But I agree with all of you. The human touch is very important, especially as you get to some of the bigger companies. And on the sales side, for example, if you're a salesperson, that's very, very important. So it's interesting to see the evolution. Some of the older folks like me are having trouble understanding how it's going to all work in the future. But I think it's really a fascinating thing. So let me at this point say first, let me stop sharing let me go back to the whole group here. I want to change my view on my screen, go to gallery so we get everybody on here. Let me at this point now say thank you to all of our speakers. I want to thank Sandeepan, thank you very much for your time. Simon, thank you as well. I know we've gone over a bit, but I also know that this next week in Young Investor Society here at our club, we're going to be watching good parts of this video. I want them to see both of your presentations, Sandeepan and Simon. The ESG part is really important to our students. And I know, because I've been chatting with a lot of our India students, that careers in India is a fantastic market for overall for Young Investor Society and for finance. It's a very financially literate market. There's a lot of trading that goes on there. And I think it's a great place for young people to learn about finance. As we know, COVID slowed things down a little bit, but we're going to all get back to it here pretty quick. So let me say to all the students out there again, we thank all our speakers today. Please consider starting a club in your school. And Mr. Van Cott and myself am here to help all of you. I will be making some trips to India as soon as we can travel, to Mumbai and to Delhi, to start to meet some of the schools and some of the folks on the ground there to help them get started with clubs in 2022. That'll be the second half of 2022. But I want you to know that I personally have found that financial literacy among young people across all of the economic and social and gender spectrums is really, really important. It's one of the most important things that people in our industry today can do for younger folks. And the gentleman that started Young Investor Society, James Fletcher, started it off of the back of a letter that he received from a student there in California that basically said, after James had gone to their school and spoken to the students about the importance of careers in finance, he wrote to James and said, we don't get adults that do that very much. We haven't had anybody come to our school and talk to us and share these experiences with us. And man, I wish more adults would come and do that. I can tell you all, students, from my own experience, that as you learn about these things, we will all deal with money in our lives. It doesn't matter whether you become a Simon or a Sandeepan or a Georgia or a Vineth or a Will in the future and actually sit in an office and trade stocks or talk to investment banking clients or sales clients. It doesn't matter. You could be a dancer or a sculptor or a teacher or any of 1,000 different professions, and you need to understand the financial markets, because you will have credit cards, you'll take out home loans, you need to invest your savings plans. That's all extremely important. And so I want to encourage everybody to think about that and continue to work towards the goal of global financial literacy. So with that, we'll wrap up. I want to thank all the students. I want to thank all of our participants today. It was wonderful to meet all of you. I hope I get to see some of you in person in the future. And we will officially close our presentation and our conference now at this time. Thank you very much, everybody.
Thank you, Mark.